All right, let's get started. Go over the round real quick. And we're getting close to the end, so I won't take too long going over this. It was very close. I will tell you that. I have seen the final scores on the spreadsheet. It's a really close round. Anybody know between which two teams? Yeah, the same two, Digby and Erie. You know, the difference in profit was similar to the prior round, but Digby really closed the gap when it came to ROE. So they obviously did some things right. Okay, they obviously did some things. If you had to guess, it would be pay a dividend and or buy back stock, right? One or both. My guess is probably both in order to achieve a higher ROE. Okay, ROE is extremely important, right? As an investor, that's one of the key metrics that I look at is ROE. We got some other ROEs that are decent, but certainly not spectacular. Sales, a little worried about Andrews, Baldwin, Chester. You know, not much in the way of overall sales. You get Digby with 220 million, Erie with 174 million, Ferris 167 million. You know, and then the drop off from there is pretty precipitous. Not that sales are always the most important, but you know, obviously driving sales means a lot. I think we had a little activity in here. We'll see that as we get down to the cash flow part. We do see some dividends paid. Andrews paid decent dividend. Team Chester paid a decent dividend, as did Team Digby. So one of our guesses was correct, that they might have paid a dividend, right, in order to reduce the amount of equity that they have, which increases the ROE. By the way, the leverage numbers up here are, you know, not bad at all. Okay, so incurring here, the difference right now, I mean, is really minor here. But Digby, if you were going to try to improve and have an ROE that is better than Erie, you know, you're probably going to up your leverage number, right? When you're paying out a dividend, your leverage goes up. When you're also buying back stock, your leverage ratio goes up. Okay, and so the point that I'm trying to make is that leverage is not all bad. Okay, leverage can be a good tool, especially when it's used to make money, and I'll give you another example of that maybe in a little bit. Okay, you have to be careful how you accumulate that leverage or how you build that leverage, if that makes sense. You could borrow money and hold it in cash. Okay, your leverage ratio goes up, but it's not really doing anything for you then, right? Okay, your equity doesn't change in that case, and so your ROE doesn't really change. So increasing or decreasing your equity by, you know, either paying dividends or buying back stock is the key thing there to increasing your leverage ratio and thus improving your ROE. Okay. The other thing, you know, here Digby Erie, you know, 22%. You know, would it make some sense to borrow money to buy back stock? Would that make any sense? Would it make some sense to borrow money to pay a dividend? God, you might kind of scratch your head over that. You know, why would any company do that? Okay, I would be more inclined as a CEO, if it were me, I'd be more inclined to do the buyback stock, and I wouldn't hesitate for a second to borrow money to buy back stock. To pay a dividend, you know, I might be a little more hesitant to do that. Why do I say that? Let's look at Erie, for example. They borrowed some long-term money this last round. They're paying 8%. 8% interest, right? I know that because it's got the series there, 8.0%. Okay, so that's what they can borrow money at. What are they earning? 22.6%. If I could borrow money at 8% and earn 22.6%, I would do that day in, day out. Okay, that's a rough way of looking at it. This is not a perfect thing, right? Because you're borrowing money, it's actually not equity, la da 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 da. Okay, But that's a pretty good way to look at that as to would you do that? Would you borrow money to buy back stock? Okay, absolutely in a case like that. Would I borrow money if I'm Ferris? Would I borrow money at 9% or whatever they're borrowing money at 8% so I could earn 3.5%? Yeah, maybe not so much, right? Might not make so much sense in that case. Although I will tell you this, here's the other thing about this. These can be compounding, right? These returns on equity, they're making money. That money's going into equity, right? Earnings, unless they're paying it all out, dividends or buyback stock, okay? And if they earn ROE this much next time, it's a compounded rate of return. So I could borrow, if I was at 7% here, it still might make sense to borrow money at 8% and have a return up here of 7% if that's kind of a compounding return, meaning that we've got some growth in the industry, which we do, right? So, okay. Bonds, like I said, we did see some bonds issued. We got two teams that are AAA, Chester and Digby, AAA ratings. Okay. Again, I think I told you guys in the United States, I think maybe in the whole world there are only 3 or 4 companies that have AAA ratings. So that's a very high standard. So, okay. Doesn't mean as an investor that it makes a lot of sense necessarily to buy in those companies. They may be low growth. They may just have lots of cash. I don't even think Apple's got $250 billion cash on hand. I don't even think Apple's AAA. How's that? Isn't that kind of odd? Okay. Some cash flow items. We still see some money going into plant improvements impressively. Baldwin and Chester, a little bit the opposite though, right? Maybe shrinking in size a little bit. I got to see something else. Getting rid of capacity, who knows? We're getting towards the end. Maybe it's an analysis realizing that they're not going to need that kind of capacity. On the other hand, this could be capacity growth, could also be automation, hard to say. We're getting towards the end. My guess is going to be capacity. Your investments in automation might still be worthwhile, but you're only going to have a couple more rounds, right? Okay, you're only going to have a couple more rounds. An investment in automation early is probably far more realistic. Okay. Now that's just the game. In real life, you wouldn't, it's not going to stop at the end of round 8, right? So you'd want to continue investing in those types of things. But there is some game end strategies that you guys are probably going to employ. Dividends we saw, purchase of common stock, pretty big amount there. But you're limited. Did you guys max out on that? Yeah. It gives you a limit as to how much you can buy back. Andrews did a little bit. That's kind of funny. Long-term debt, we did see some long-term debt. Four of the teams issued some long-term debt. That's kind of surprising in that 1, 2, 3, 4, all 4 of those teams actually have a reasonable amount of cash on hand. Okay, Ferris in particular, look at that. They issued $26 million in long-term debt and they got $52 million in cash. That I don't understand. Okay, bad cash management, but that's the computer team. They maybe they're going to make some huge investments this round. I don't know, but that's if you were going to borrow that money, you should have been making those huge investments that particular round. Baldwin, $29 million in long-term debt, $49 million in cash, right? So you got now they had a big emergency loan last time, and so I'm sure that gave them the nervousness a little bit. And that's probably why they did that, to make sure that they offset that. One thing to keep in mind, short-term borrowing is cheaper than long-term borrowing. Okay? Short-term borrowing is cheaper than long-term borrowing. So sometimes it makes sense to look at the max that you can do on the short-term side. Okay? What other things we got going on here? Where are we sitting for total equities? Look at that. Baldwin down to a total equity of $35 million. If they turn it around, they've had losses the last 2 rounds, but if they turn it around, it'd be pretty easy for them to put up some impressive ROE numbers then, right? Could happen, so we'll see. 144, so Digby's got the biggest equity by far. Andrew's got a little equity too, really, but biggest equity by far, but they got the most sales by far too, right? So you've got to do that. Profits, we saw those up above. Still lots of capacity. You see the 2 leading teams, Digby, Erie, are the only 2 teams that are actually using capacity. So Again, I don't know if this is because of we're just not selling what we thought or whatever, or if it's because you're trying to avoid overtime. But overtime's obviously not affecting, these two teams. So it costs a lot of money to have capacity. Those costs are not easy to pull out of those financial statements, but it costs a lot of money to have capacity. It costs a lot of money to have this kind of excess capacity. Inventory numbers weren't, I didn't look at that up above, but not too bad here, right? So we got rid of, I think, inventory. If we go back up to the cash flow, I bet you will see some positive cash flow numbers due to inventory. Huge for Baldwin, right? That was the biggest one. Ferris had decent amounts. Digby and Erie built a little bit. At this point in the game, it's not huge, especially given the size of their sales. Those aren't huge amounts. Andrews a little bit of build too. So. Just quickly go through these. We're going to have a little growth back again. We were kind of in a little recession, but it looks like it's going to start back growing again. That's kind of nice. Little kind of all over here on the low end, right? Erie gave up 9% in the low end. Digby was able to take advantage of that. Who knows? That might. I don't know. Pretty even there. We only got a few teams actually. We got a decent number of teams competing in the high end. Decent number of products competing in the high end, I should say. 3 teams competing in the performance, and 4 competing in the size. Kind of a cool. You guys have a pretty good disbursement. Pretty good. These should be congregated in the size and performance, and they are pretty well. That's pretty good disbursement here. The high end, we got some good stuff, good competition going on there. That's where those products ought to be, right out in front. So kind of cool. HR, look at that. We're getting some 20% numbers in productivity. Huge in terms of cost savings again. Oh, I didn't go. We got to go up and look and see what the labor cost numbers are for Erie. Had the low one. We'll have to go up and see. Still some money invested in TQM, okay? And you see some really nice percentages building down here. Demand increases. Look at that, material and labor cost reductions. When you're talking 12%, and you're talking about at least $100 and some million, they're saving $10 or $12 million at this point in time, just in those two categories. Not even counting the demand increase. Huge dollar amounts, huge. Let's go back. I got to go back up, and then I'll be done here. We got to look at that. I don't know why I didn't notice that before. What the Erie? Still at $1.47. Wasn't it $1.44 last round? I think for your guys' labor cost, it was $1.40 something. I think last round. So, but you guys are using full second shift, almost full second shift, not quite. Yeah, you are. It says 100%. So, but you're only using. That's kind of strange. Only utilizing 182%, but 100% overtime. Yeah, well. Okay. Questions about the round, other than perhaps who the victor was? We'll take a look at that. Let's see, round 6, yep. I got a new monitor, Josh, but it's still the right side, doesn't show up of, I can't get over here where that slider's at or anything. So something in the computer, the way it's displaying for some reason, certainly.
It's that module there, all the lights.
Oh yeah?
It keeps changing the size of it.
Yeah, I gotcha. Thanks for the new monitor, though. If you had any part of that. Okay. Earnings per share. Digby, we saw, had the best earnings per share. ROE, though, was Erie. Contribution margin, Digby, a little bit higher than Erie's. Okay, I think they were pretty close, if I remember right, up there. We didn't look at it, but I think they were both in the 40s, reasonably in the 40s. There we have it. Profits, cash flow, 95 for Team Digby, 93 and a quarter for Team Erie. So a very, very, very close round. Okay, it's going to be open. And I might be a little nervous about Baldwin and their ability to earn, just because they do have such a low equity amount. If they can turn it around and get the little profit going, could be impressive. We'll see. I didn't look at their shares outstanding and those types of things though, so that's going to be meaningful as well. So congrats, Team Digby. You guys going to dominate the last 2 rounds? Okay. I like it when Jaime says that, because then they get beat. Okay, I have posted the assignment. I'm going to save this and we'll go over it really quickly.